This is News Talk 980 CKNW.
It may be a new year, but does that necessarily mean, Linda, that things will change on the economic and financial front?
I don't know. I'm not the right person to ask. We're talking interest rates, the real estate correction. Oil is recovering. Yes, the big run in stocks, everything in the spotlight. I don't know anything about this, so let's bring in Michael Campbell, host of Canada's #1 rated financial show, Money Talks. Michael, let's start by asking, what do you think the key is to 2017?
Well, you're quite right. I mean, we had all those issues in 2016. They didn't go away because we turned the calendar. I mean, I'm just looking at the problems that they've got in the yuan right now in China. I'm looking at the U.S. debt rising to $20 trillion. That's double in the last 8 years. You got other debt problems around the world. And then you look at the market. I mean, there's still a lot of choices here. I mean, it's going to be key what happens with interest rates, with the fall of the bond market. You know, those are really top of the list. Mm-hmm. But for me, I still have to go with, I got to figure out what's going on with the U.S. dollar. I've been saying really for a couple of decades, getting the direction of the U.S. dollar right, I think, is the most important variable to get. I mean, come on, we got commodities measured in U.S. dollars. We got Canada's biggest export market, obviously, is the States. So again, our relationship in terms of currency is important there. I'm looking at how much money is flowing into the States, and that's been the story over the last several years. It's projected the Dow Jones to this near 20,000 level, and we look for that to be broken here. But all of that, it's all about the U.S. dollar at this point.
Mm-hmm. So and staying on the U.S. dollar, we like a nice low exchange rate, so we can go back down to the States and buy those $30 Levi's. But it's not like that at the moment. Where do you see it going the next 12 months, Mike?
Yeah, I think every time we've looked, I think the markets tell us, and it's overcoming our own bias. So what has the market told us really consistently? And that's every kind of geopolitical uncertainty puts money in the U.S. dollar. And it literally started in 2008 with the subprime crisis. We saw the money start flowing into the U.S. dollar. We've been on the other end of that, of course, in Canada, as you allude to here. It's just 3 years ago, it was January 2013, we were still above par against the U.S. dollar. So I still think that's the key thing, that the U.S. dollar is going to get stronger. In 2017, I'm going to be really interested in what's going on in Europe, because those problems are going to keep sending money into the U.S. We've seen it reflected in the euro dropping down. They're getting toward par, which has been one of our big projections on Money Talks. But we got the German election. And if Angela Merkel loses, that's going to be a really big story, because she's seen as sort of the linchpin of what's left of the European Union right now. So if she goes, look out. We've also got French elections, by the way. Francois Hollande is so unpopular, he's not running. But we look at the sort of anti-immigration National Front. They are leading in several polls there, so that's going to be key. You've still got Italian banking problems. All of that stuff will push money into the U.S. dollar. So I'm still looking for a higher U.S. dollar, especially over 2017-18.
You know what, Michael, I had a couple of smart friends of mine say over Christmas that they were putting all of their money, cashing out of stocks and moving it into just sit in their bank accounts because they were concerned. And I thought, really? What's going on with the stock markets?
Well, first of all, being cautious is never a bad idea, I don't think. So, we've seen this huge jump and run up in the U.S. markets, for example. That's probably what they're alluding to. After Trump got elected, you had the biggest stock market rise since 1952. The question is, of course, will it continue without a break? And obviously not. I think the question is, will it show that kind of momentum continuing? Because of the 4 years in the presidential cycle, the first year is always the worst for the stock market. That's been a very high probability bet that the first year of anybody's presidential term has been the weakest. So that's one thing that's mitigating against the stocks after this initial flurry. But I want to be very clear, I am still very bullish longer term, especially on quality U.S. stocks. Now, you look at the Toronto Stock Exchange, it's benefited. It was up over 17%, this past year. But it was benefiting from the fact that finally commodities recovered. The Bloomberg Commodity Index measures, a basket of commodities. Well, it was up 11%, but the key was it hadn't been up in 6 years. Crude oil, we know it was down at $26 to $28, over 52 right now. We just forecast having it around 50, 55 this year, but that was up 45% from the beginning of last year. Silver up 17%, gold up 9%. So presto, there you've got the overlying, markets coming up. But the question is, will those commodity gains be sustained? Was that just the recovery after a 6-year bear market, or is there going to be some further strength? I'm a bit on the sidelines on that one, like your friends. I don't think. I think we can maybe maintain some of these gains, but I'm not seeing it on the short term. One, the strong U.S. dollar, and two, the global economy has not recovered.
Interesting.
Mike, you've said that one of the big stories of the last half of 2016 was the rise in bond yields in the U.S. What do you see happening with the rates with that?
You're right. This is another monster one because there's so much money in the bond market compared to the stock market. And we lost over $1 trillion in bond values post-Trump election. Just like we gained on the stock side, we lost on the bond side. I've said this, I know, before, but I think that bull market and long-term bond yields is over. We're going to see those interest rates on longer-term bonds, 10-year, 20, 30-year bonds, go up and continue that way. In Canada, a different story, though. The Bank of Canada has stated that they're not going to move rates in 2017. Our economy is not creating the demand. There's a lot of slack in the economy, so you're not going to see that. But, despite that, the bond market has moved a little bit. I mean, the yields have gone up a little bit. We've seen mortgage rates higher. So I still think that's a dangerous place to be. If I own bonds, I want them short-term right now, as a holding pattern for sure, but I want them shorter-term because I think there could be some real carnage. That's a real danger signal what happens in that bond market if we continue to see prices drop and yields go up in the U.S. especially.
Okay, let's go local. We started this year talking about one of my favorite subjects, real estate. My prediction, it was the story of 2016. I think it's going to be the story in 2017 too. But honestly, I don't know where prices are going to go.
Yeah, it may be the story of 2017 for the opposite reason. I mean, we just got the numbers today. And from the real estate board, and we got home sales in Metro Vancouver dropped 5.6% in 2016. December, by the way, is down nearly 18% in prices, 39% when you talk about volume compared to December 2015. Now, I know that 2015 was a very strong year, so it's going to be a tough comparison in that way, but I think the message is clear. We saw the peak in prices, and I know we've talked about this, and I'm proud we've talked about this on this show, but we saw the peak in prices in April of 2016. From that point on, it got very weak, and that's what I'm looking at. Those last 5 months, we had, clearly we had governments wanting to slow down the market. Well, they succeeded, especially when you talk about the sales of single detached homes. I mean, we saw the new mortgage eligibility rules. I don't think those have played out at all at this point, so we get weakness on that side. We saw the foreign buyers tax come in. Now, in addition to that, January 1, we saw China institute even more currency control. So that's going to be interesting. So that sort of side of the market is going to ease off. That's what's been reflected in single detached. So, yeah, I agree. Real estate could be a very, very big story in 2017, but it may be because of weakness, at least through the first several months of this year. And that will start rippling through in housing starts and other economic activity. I really felt when they went after the real estate market, it was be careful what you wish for, as H.L. Mencken said. You just might get it good and hard. And I think that we're going to see continued weakness through the first part of the year, and then we'll see.
He's the host of Canada's #1 rated financial show, Money Talks. Michael Campbell, always a pleasure. We'll chat to you next week.
Vancouver's News, Vancouver's Talk. This is News Talk 980, CKNW.